Hey, assalamu alaikum everyone. Thank you guys for joining us for our financial literacy workshop. My name is Adnan Perwez. I am one of the student directors on MSA National board. And in this workshop, inshallah, we are joined with two speakers from Wahed Investment, a financial technology company that focuses on investing through Islamic ethical principles. Some of the topics that we will be covering, inshallah, include halal slash shariah investing, investment tools, how to invest money without interest, and compound growth. We will also be having a Q&A session. So if you guys have any questions throughout the program, you guys can go ahead and input that into the chat. And inshallah, our speakers will get to that after their presentation. Just a quick introduction to the speakers before I go ahead and hand this over to them. We are joined by Karim Ansari and Zaki Fazalyar. Karim joined Wahed in April 2019. He is a graduate of George Mason University. He started his career with the United Nations, helping them fund the refugee crisis in Syria, and he then transitioned to the startup world, efficiently assisting companies in developing their businesses so they can make it to the next level. We also have Zaki Fazalyar. Zaki joined Wahed Investment in May 2018. He earned a BS from Virginia Commonwealth University in finance and has spent over 4 years working in the investment services industry. He started his career with an internship with Scottrade that later became TD Ameritrade in Richmond, Virginia, where he was an investment consultant intern working closely with the brokers on the client-facing end. We are very honored to have both of you here today. And with that, inshallah, I will pass it over. And remember, if you have any questions at any point in the program, please feel free to input that directly into the live stream chat.
Hey, thank you so much, Adnan, for that introduction. Hello, everyone that's watching tonight and possibly in the future. We appreciate the National MSA for who we, as well as, halal investing, what shariah investing is, and, how to kind of, manage your finances in this, day of age as a Muslim as well. I'm Kareem, and then this is my colleague, Zaki.
Hey, Salam. Thank you for joining us tonight. Thank you for that excellent introduction, Adnan. We're very excited for this presentation tonight. Hopefully it will be beneficial for everyone. And don't forget to drop some Q&As after the presentation.
For sure. We always encourage questions. So, if you guys have any sort of questions to ask, make sure you guys, drop it in the box. So we'll go over the agenda today. You kind of already know who we are. We'll talk a little bit about who Wahed Invest is, Muslim investing, halal investing parameters as well, what type of investment accounts you guys can open, whether now or in the future, what are stocks, what are ETFs, what are mutual funds, budgeting as well, dollar cost average, and then we'll do a Q&A at the end, inshallah. So to kind of begin, Wahed Invest is a robo-advisor. We were created in 2016, and in 2016, that's when we got our SEC license as a registered investment advisor. We now have over 200,000 clients globally in over 140 countries, and we have global offices in New York, London, Dubai, Malaysia, and we're soon opening in Nigeria, Indonesia, and then Saudi Arabia as well. And then in the future, we'll be expanding into other countries as well. But yes, we were created for Muslims, as well as people that want to ethically invest their money in a way that kind of follows their religion. And we found that, not too many Muslims, have options when they want to invest in the stock market. So alhamdulillah, once we were created, we've taken off pretty well. And a lot of Muslims, are starting to, put their money into investments in the right way. The pictures that you guys see in front of us, this was in New York City. We were invited by NASDAQ to launch our ETF, and it was a great day. It was the first time, an Islamic investment advisor ever did this, especially on Wall Street. And yeah, Zaki was there as well. We had our whole team there from the US as well as, other countries too. And we really cherish that, and we hope to, eventually launch more funds for, our clients and our future clients as well.
Yeah, It was the first halal ETF that was launched on the NASDAQ exchange. Very big deal for us Muslims. The ticker symbol for that is HLAL, just like halal. So for people out there that use Robinhood or other brokerages to trade from, publicly available. So for you to check out.
Yeah. So yeah, we'll go into halal investing and what it is.
So the reason why this platform was made about was to bring accessibility into halal investments, right? If we think about maybe 10, 20 years ago, it wasn't as easy. Minimums were well accessibly over like $5,000, $10,000. Brokers weren't as easily accessible to achieve or retrieve these funds to get from. So we thought, in this day and age of fintech, the whole mobile trading, realm that we've come in about, that we should allow Muslims to be able to get these investments, whether it's for savings, retirement, long-term, short-term investing. And we thought we were in the right place in the right time to make this fruition come about. With our company, the way we differentiate from the other competitors out there, there's guys out there that came about maybe in the 80s or the 90s, well over 20, 30 years ago, but they focus more on mutual funds, and which we'll get more into later. But our ideology, our methodology when it comes to investing is totally different. We like more long-term based. We like index investing, stocks that have higher growth potential, and just investing in we'll say the broader market, but into halal, of course, stocks. This industry is massively growing. The stat up here, it says it's gonna be well over 70 billion, but I've read by 2022, next year, it's going to be well over a $2 trillion industry globally for halal or shariah compliant investing, which is a major deal. As we're well over 1.2 billion Muslims globally, and this is something that we need. So this isn't a secret anymore. People shouldn't sit on the sidelines anymore. It should be something that's widely available for everyone to, Insha'Allah, take advantage of. And why it's important, I think it's important because we want to invest in something that, doesn't infringe our ethics or beliefs. We believe that, the stock market, it could, to some people it's scary because they're like, oh, look, there's interest involved, there's riba, I don't understand it, it could be haram, but that was the misconception. Nowadays, it's like, we do our due diligence, there's certain principles and factors and variables that we follow that allow us to do this. So, in the long term, this can work out and Inshallah create something for us to cherish upon in the future.
Yeah, and to touch upon that too, if you haven't ever heard of halal investing or like Sharia compliance, I didn't know what it was either before I began, working for Wahid. And when I found out that there was something like this accessible to me, and to my Muslim, community members and friends, my eyes lit up. And finally, as Zaki said, there is a solution where a lot of Muslims nowadays, sometimes they get scared about investing their money in the stock market to see if it's haram, like is there interest involved, all of that. We take care of all of that. We have a Sharia review board that makes sure that that any type of product that we offer to our clients is Sharia compliant. And alhamdulillah, now this is available. We have an app that you guys can download. It's on the App Store. Just search Wahid, and our online platform works wonderfully well as well. And yeah, this is definitely the future for Muslims around the globe, and anyone that wants some sort of ethical investment or to kind of grow their money in a different way instead of real estate or cryptocurrency or something else. Oh, there it is. Okay. So these are the sectors that we don't invest in. So obviously, like, we look at the financials of a company. We want to see if they have excessive debt, if there's interest involved. So there's different thresholds that we look at. If you look at the bottom of the screen, on the right-hand side, it says AOFI. And this is actually a governing body out of Bahrain. And they were created, back in the day. And they're the ones that came up with the parameters for what is Sharia compliant and what is not. So, obviously the companies that our clients do not invest in and that we don't offer are companies like gambling companies, tobacco companies, alcohol companies, producers, firearm producers, and any sort of adult entertainment. anything that we deem haram off the bat, we don't even look at those type of companies. Then we have a bucket that's left over with a bunch of other companies, and then we look at their financials and make sure that they are acceptable, for our clients and for Muslims to be comfortable to invest into.
We also take the extra step in looking at the company's financial ratios. We look at balance sheets, cash flow statements, income statements. We want to make sure that these companies aren't too leveraged with debt, and with the debt, as you know, comes the interest aspect. So we make sure in the back end that we do our diligence on that. We scrub everything. We make sure that these companies align with our faith. And yes, so we have AOFI, and we also have our internal in-house Sharia board called the Sharia Review Bureau, led by Sheikh Dr. Adnan Hassan, who's a globally decorated PhD Islamic finance, mogul. So these guys, put in the hard work. They screen the stocks on a monthly basis and on a quarterly basis. If anything needs to be added, replaced, substituted, taken out, we let the experts do their jobs. And lastly, we also do the purification reports. So that's a big element that we add, sort of like our extra layer of Sharia compliance, that yearly we send out a report to our clients saying this small amount you can give away to a Muslim charity if you want. But it's without the intention of sadaqah or zakat. It's just impure money. Typically, this amount's really, really small. I'm talking about pennies, maybe nickels, but it's just that extra layer of comfort that, hey, we are going to screen on every little bit that we deemed that came through. Just get rid of that, and the rest of your earnings or your capital gains is Sharia and halal.
That's correct. And then also, there's so many different companies out there. Our ETF actually has mainly large cap companies, like Tesla and Apple. So there's a lot of good companies that you can still invest in as a Muslim. And if you do it, make sure you kind of go through, a screening and make sure that, everything looks good before you do invest your money into it.
So what makes us different? So Wahid Invest, as you know, we are the robo-advisor. We charge a fee based on portfolio values, and we're actually the lowest cost in the halal industry if you compare apples to apples to the other guys out there. The reason why is that we use the product the vehicle called the index fund, which is a basket of over, what we use is 220 stocks. It's passively managed, and you can get started with it just through our platform, a minimum of just $100. It's also publicly available to buy, TD Ameritrade, Fidelity, Robinhood. It's also available to pick up. You just buy it by the share price. But through us, you can just start with $100. The mutual funds, they're definitely layered with fees. They don't really have an investment goal in mind. They come with like the front back end load fees to buy and sell. They come with 12B1 fees, and they have a lot of fees layered that kind of just scalp off of you. And in the end, you're not left with all the total returns that you could potentially get. And this ties back into our methodology that, you don't need to, potentially have a mutual fund to get returns of the market. Yeah, it's great to have, a manager that can manage your stocks, but why not just buy the whole Sharia market and just let it sit and grow? There's no actively trading going on. We're not a hedge fund. We're not day traders here or get rich quick scheme. We merely just invest your money into all the halal stocks at once and just let it grow. And we'll get more. I'll go take a deeper dive into that in the other slides. And then lastly, individual stocks, you're not really getting diversification from it. You're kind of just putting your eggs all in one basket. It could work against you. Sometimes these companies go out of business. Sometimes bad news comes out, and you're kind of, getting the short end of the stick. So it's always good to diversify in multiple areas to kind of have that broader, holistic investment experience.
Correct. Thanks, Aki. And also, we're known as a fiduciary, so we look out for our clients' best interests. We want to make sure that you guys, aren't, questioning anything that we're doing. Everything that we provide to our clients is halal. And the great thing about Wahid, to kind of go back on what Zaki said, our minimum investment is only $100. The good thing about that is our client base is seriously spread out. So we have, from students all the way to, people that are retiring. And the reason why we want to make it so low is so everyone can invest their money. Whereas with a lot of other advisors you would have a minimum of $1,000 to start, $5,000 to start. We kind of noticed that Muslims, a lot of Muslims aren't invested in the market, and who wants to put down $5,000 to start into something that they don't really know anything about or they don't understand. So that's why alhamdulillah Wahid's been so successful, is because we want to start the ground floor and make sure everyone has access to this. So these are the type of investment accounts that we have, and also external advisors have. This is for you guys in your future. And these are the type of accounts that you guys can open, anywhere or with Wahid. So there's a general and individual account, which is a regular investment account. You can kind of, put money in whenever you want. You can take out money whenever you want. It can be used for, long-term, short-term, or even medium-term investing. And then obviously there are tax implications when you take out your money, but the good thing is we send your tax form every February to your documents folder in our platform, and then you can just give it to your CPA. Then you can open a traditional or Roth IRA. So these are retirement accounts. These are everywhere. You can literally get this anywhere. So there's a difference between both of them. The Roth is a tax-free retirement account. The traditional is a pre-tax account. You can only put up to $6,000 into this account every single year. So once a year, you can do $6,000, or you can kind of spread it out. And if you're over 50 years old, you can actually put in $7,000. That's from 2019. Every year, sometimes the IRS changes these numbers and these figures. So make sure you kind of Google it or go to the IRS website, and you can see how much you're allowed to put into it. We also do a backdoor Roth. Backdoor Roths are available everywhere. Once again, this is for high income earners. So, anyone that earns, for now, I think this year it's over $133,000. And then also you have to look at, your joint income if you're married. That's over $200,000. And then you'll be able to do a backdoor Roth. Then we also have SEP IRAs. These are for business owners. Independent consultants as well. It's basically a pre-tax savings account where business owners can kind of, save a little bit of money by opening this type of account out. There's also 401ks, 403bs. So when you guys go into the workforce, or if anyone's in the workforce right now, maybe your company offers a 401k or a 403b. And, that way you can, invest, whatever money you're making off your paycheck into that account, and also help that grow too. Make sure you guys kind of take advantage of that. And then also look into, what type of account it is, because there are companies that offer Roth 401ks, and there's companies that offer traditional 401ks as well. And then the last but not least, there are UTMA, accounts, child accounts. These are, used for like college savings. A lot of parents open these type of accounts up for their children to save for their future as well. We don't currently have those, but they will soon be coming to the platform. And they're definitely something that you guys should take advantage of if you guys do have, children.
One thing I wanted to add, great slide, by the way, Kareem, about the IRAs. So conventionally, of course, I can go down the street to Bank of America and open up an IRA. But one of the big value adds of us being Sharia compliant is that none of the cash gets swept with interest. For example, if I go to Bank of America and I open up that IRA account, my cash portion of that portfolio will actually accrue interest yearly. And the way we set up our relationship with our custodian broker, Apex Clearing, is that we don't want any interest, and it's no interest at all. It's not like the interest comes in and then we sweep it out the back door. No, it doesn't even accrue at all in the first place. So that's one of the great benefits of having an IRA with us. If no interest even enters the door into your IRA. So
thanks for stressing that, Zaki. And one more thing too on this slide, the 401ks, a lot of our clients or future clients, they do have 401ks at work. Usually when you get a 401k, the company, gives you a set amount of funds that they've chosen for you to invest into. Now, a lot of those funds can be mutual funds or, bonds or heavy interest. And, the great thing about us is that we launched our ETF on the NASDAQ exchange. So it's publicly available for everyone. So you can always check with your company if you can invest into HLAL. For your 401k instead of being into those, funds that you're forced to be into. So now we'll talk about like how stocks work, what type of stocks there are, what is a market cap, what are active and passive funds, ETFs, mutual funds, dollar cost average is a very big slide as well, and strategy that a lot of good investors use, and then some key takeaways as well.
Okay, on to the next slide of how stocks work. People or companies usually issue these stocks to raise money for their companies. As you've heard about these IPOs, and this year was actually really hot with these IPOs of all these EV companies coming out and whatnot. But these companies pretty much go public to raise money internally by issuing these shares. And when you buy a portion of the share, you own a portion of the company, but in return, the company makes that money. And you as the shareholder, you get to profit on the difference. If I buy something for $5 and I sell it at 10, and I made that $5 profit. You also have what's called shareholder advocacy. So you're kind of, theoretically like a board member where you get to, once a year, if you own a stock, they'll send you like a report and you get to vote on different things like, oh, I don't like this mission that you guys are going to, or, oh, I don't like this merger or acquisition that the company wants to do. So you have that advocacy, and that's something that, some of our clients get to do with us as well with that. Next slide, different types of stocks. So, you have your large cap stocks, your Apple, your Nike, your Home Depot. These are like the big, large Amazon, Google, blue chip stocks. Then you have your growth stocks. These are like your tech companies, like your Netflix, your Etsy, Snapchat, Pinterest. These are companies that quarter over quarter are growing. Zoom, massive company through COVID. We saw the pandemic, Zoom took off. Dividend stocks are companies that, AT&T is, I think, the biggest dividend paying company, where the longer you hold a stock, they'll pay you out in dividends. It's called capital expenditures. When a company makes a bunch of profit, they either say, hey, we can invest that money back into ourselves, or we can give it out to our shareholders in the form of a dividend. Cyclical stocks are more like, your auto companies, your hotels, your airlines. Defensive stocks are like oil and gas, your healthcare stocks, your bank stocks. And then penny stocks are like your volatile, under $5, under 5 billion in market cap. These companies are as seen as like pump and dumps, market manipulation kind of stocks. Your AMCs, your GameStops. These stocks are not, good for long-term investing. Please don't take this as financial advice, but these stocks are not ideally for a long-term portfolio hold. These stocks are all over the place, but some people seem to enjoy them.
Yeah, that's correct. And then also, like, just to touch up on cyclical stocks, like these are stocks that depend on the economy's health, right? So when we went through COVID, what did we see? We saw the airline stocks plummet, right? And cruise line stocks plummet, right? Because people didn't want to go out. They didn't want to fly anywhere. They were scared of the virus. So those type of companies were, severely affected. And we saw how their stock prices kind of went down and down and down. Even today, now they're still trying to recover a little bit. We see people starting to fly now. So, those type of stocks, always keep that in mind. Cyclical stocks, are affected by what's going on with the country or with the economy globally or even internally. And then you have also non-cyclical stocks that really don't get affected, like, toilet paper manufacturers, right? Everyone needs toilet paper. So like those type of companies, they won't really, suffer in certain types of, scenarios. And then one other thing I wanted to point out are the dividends stocks, right? A lot of our clients, not just our clients, a lot of, investors, they do look out for dividend paying companies because that's basically free money in your pocket. If you're a shareholder and they'll pay you to be a shareholder, a lot of people like that, So when in our ETF, we have about 70 or so dividend paying stocks, and then we automatically reinvest it for you so we can kind of keep your account growing.
So next slide, we come to the passive versus active. And this kind of ties into how we differentiate from the other competitors that we have. So an index fund pretty much tracks a broader index, like as we know, the S&P 500, which is 500 of America's largest companies. We have NASDAQ 100, which is 100 technology companies. And then we have the Dow Jones, which is your top 30 big companies. So an index fund essentially tracks a broader market, right? Like You have all sorts of different sectors in there. You have your information technology stocks, healthcare, energy, biotech, industrial, you name it, right? And you're essentially just putting your money and you're buying the entire, we'll call it a pie. You're buying the entire pie and you're just letting it sit and grow. As opposed to a mutual fund, which is more so handpicking stocks. It's about 40 to 50 stocks, and it's managed by a portfolio manager and his team of analysts. So the analysts will go and find 40 stocks for that month and say, okay, like I like these stocks. For example, if he has Target in there and Target's doing bad, they'll take out Target and they'll put in Walmart. So they're actively trying to beat the performance of this index, right? So they'll take 40 stocks and say, hey, we can beat the entire S&P 500. Statistics show 97% of the time they fail to do that because it's very hard. We don't know the future, right? And they're typically more expensive. On a short-term level, yeah, mutual funds can potentially do higher or better in volatile environments because they can easily trade out of the bad stocks and put in new ones. But at what cost, right? You're paying more money, potentially higher capital gains tax because it's actively traded. And on top of that, there's not really an investment goal in mind, right? Like, they don't care that if you want to buy a house, save for a house, or you want to buy a car, or you want to save to get married one day, right? They don't have that in mind. So a mutual fund is more active where they're trying to control how these returns go. Our methodology is how the market has transformed what it was 20 years ago to what it is now. Like if we look at Wall Street, they love these ETFs now. I read this article last year. It said during 2020, $500 billion came into ETFs and about 200 billion exited out of mutual funds. So we can see how the transformation of the investing psychology has adapted to people want these ETFs, right? They're low cost. That's number one when it comes to investing. You want to look at the fee that you're paying. You always want to pay a lower fee because that's more money you get to keep in your pocket and not the manager's pocket. So here at Wahed, we're all about low fees, high diversification, and the robo, the technology aspect of it.
Yeah, and just like giving you the entire market, right? The index fund, you're giving you the entire market, whereas with mutual funds, they're kind of capped around like 35 or 40 stocks. And, as Zaki said, they're trying to outperform the market, which rarely kind of works. You rely on, a portfolio manager and hope he picks the right stocks and does well. Whereas with an index fund, you can kind of let it grow and let it grow over a long period of time. And nowadays you see, as Zaki said, a huge influx of people becoming wiser on the fees that they're paying, as well as what kind of funds that they're in. So this slide right here is called "What is dollar cost average?" This is an investment technique that a lot of good investors will use. Zaki will explain it a little bit better, but if you're looking for some sort of technique to help you as an investor, you can pay attention to this slide.
Yeah, thanks, Kareem. So dollar cost average is an investment strategy where it takes away from trying to time the market, right? The market's always up and down, up and down, up and down, right? And it's a way where you get to buy in intervals where you're pretty much buying the middle of it over a frequent time. For example, let's say you bought a stock at $10 and it came down to $5. If you buy it again at $5, now your average is 7.5. So over time, people who decide to do this strategy tend to outperform. And for example of that is, let's say there's an investor, investor A and investor B, right? Investor A says, I have $10,000 and I want to just dump it all in January, right? So he locks himself into that share price, that cost basis. He's locked in at, let's say, 35 bucks. Investor B says, I also have $10,000. But over the course of the next 5 months, I'm going to put in $2,000 every month. So 2,000 in January, February, March, April, and May. So what the investor B does is that, let's say in January, the stock's really high. Sure, he bought it at the top. But let's say in February, the stock price dropped really low. So he bought it at a discount. So he actually averaged himself down. So over the next 3 months after that, he's buying at different prices. So he's pretty much averaging himself over wherever the market's going because he doesn't know the future. We don't know where the market is going. So it's better to buy it at certain intervals. So you just kind of ride the market on its way. Because let's say investor A, right, he locked himself in at that $35 at the top of the market. Let's say for the next 5 months, there's a market correction, market came down. He started at a loss. He's already at a loss, and it's like going to be really hard for him to climb back unless the market picks its way back all the way up to and where he's at break even. And then when it goes up, sure, he might be in profit, but at what cost, right? All that stress, all that time, he's sitting there at a loss. So I think it's a good strategy where you don't have to time the market. And that's actually one of I think the best feature that we have on the platform. You could do a weekly, bi-weekly, or a monthly basis. Set a deposit, $100. We know you guys are busy with your, schooling or 9-to-5s, or if you have a family, right? Nobody has time to sit there and look at charts and fundamental technical analysis, right? It's just like, look, I'm busy, but I'll let the experts do their thing. I trust you guys, right? So you just have that frequent, weekly or monthly deposit going in, and you're kind of just buying in wherever the market goes, and it's not going to affect you. You're pretty much taking advantage of volatility in essence. Yeah,
well explained, Zaki. And a lot of, sometimes we get questions like about timing the market. Like, is this the right time to get in? When should I get in? Is it too high? Like, where is it at now? What should I do? I have this much money. A lot of people, eventually go into dollar cost average, where instead of overthinking, where the market is, you just start, putting in $100 a month and just kind of let it go and let the market kind of ride itself. As we stated before, we're all about like a long-term investment, passive investing, right? The market, if you look at the history of the stock market, you'll look at the chart, it's pointed at a northeast trajectory. Yes, to get to that position, we went through a lot of ups and downs, some market crashes, some corrections, right? You're going to go through volatility in the stock market. It doesn't go all the way up, right? And when it does come down, it's usually, comes straight down like an elevator. But when it kind of goes up, it goes up steadily over time like an elevator, how it's pointed. So this type of method can help you guys out. So let me get to the next slide. So this is our last slide, and then we can get into some questions. So like some key takeaways is, the more we invest as Muslims, the bigger our voice gets in making a difference, right? So, as a shareholder of a company, you have voting rights. So if a company wants to, for instance, let's just say like Apple, they come out and they're like, we want to buy this alcohol company out of the Netherlands or whatever to make more profit for ourselves. You as a shareholder, you're able to vote on issues like that, or the directions the company can take. And, if there's a lot of Muslims involved and, our voice gets bigger and bigger, then a lot of these companies might, not do these type of things, and it works out, for us in the long run. Who we are again, Wahid, we're a digital online investment advisor. We have an app on the App Store. We're still, budding, and we're in a really good stage right now, and we're growing, very, very well globally, not just in the United States, where we have a lot of clients globally right now. And we're about to hit a milestone. We're almost to 250,000 clients worldwide, and we still haven't opened up in these other countries that we're about to open up in. And then as Zaki kind of went over the index funds, what they are, they're a basket of stocks, what type of indexes there are, Dow Jones, S&P 500. I'm sure you guys have heard of the S&P 500. It's like the top 500 large cap companies in the United States and in the economy. And they're all in one index. When it comes to investing, we always stress don't let your emotions take over, right? So when COVID happened, the crash happened, and I love going back to COVID because a lot of our clients are new, and when COVID happened, the market went down, right? And a lot of people started freaking out. Not a lot of people, I would say, but not for our clients, but like in the entire United States and worldwide, everyone didn't know what was going to happen, if the economy was never going to recover, anything like that. And then you saw the wisest investors, they did nothing. They literally just kept their investments and they didn't pull anything out. And then literally 3 months later, 2 months later, the stock market started rising, and then now we're at all-time highs. So, you shouldn't let your emotions, dictate your investment goals. Stay focused. And there's different strategies out there that you guys can take advantage of, just like dollar cost averaging and investing consistently. And then never forget about your old retirement accounts, from your previous jobs, as well as your current job right now. If you do have a 401k, most experts will say, take advantage of that. And hopefully you can invest it in a halal way, especially if you have access to ETFs like ours, which is HLAL. And if you also left your previous job, the cool thing is you can actually roll over your old 401k or 403b or retirement account that you had with that company to Wahid, instead of it going to another company where you're locked into interest-based funds or whatever. So never forget about your retirement. Especially, I'm sure most of the people that are going to watch the stream are students, and we've held a lot of MSA talks with like many universities in the past year, like Brown University, University of Texas, and we always tell the students that are in school, the most important thing is to start early when you want to invest, because Insha'Allah, you don't have to work till you're 90 years old. You'll look back in life and you'll look back at your young age and be like, thank God I started early. Because I can't even tell you the amount of people that I've talked to that are pretty high in age and they don't have, anything saved up for retirement, and they're going to be working, forever. So make sure you guys eventually open a retirement account for yourselves and your future.
That's a great point. One thing I wanted to add, and if we look at just the way our country is structured, is that all of our pension funds and our retirements, 401ks, IRAs, it's built around the stock market, right? Like everyone's future retirement funds are literally just designed around there, right? So why shouldn't you be involved in it, right? If you're inevitably going to, be reliant on it, right? So I think long term, the earlier you get started, the better. And I think, doing it in a halal way that doesn't, infringe your beliefs or ethics is like the best way to do it, right? Like you're happy, Allah's happy. And I think like there's no better place to do it.
Yeah, that's a great point. Yeah, because a lot of people, some people that, contact us or that want to become clients, they've said that they've never been in the stock market. And then, we ask them, we're like, do you have a 401k at work? And they're like, yeah. And we tell them, like, you're already invested in the stock market. So that's a very big point that Zaki pointed out. A lot of people are already invested in the stock market through a work retirement account or whatever. So, make sure that you guys align your personal goals with your investments, save up for that house that you want. It's a very easy way. I wouldn't say easy way, but it's another way or another vehicle to make money. Instead of, going to buy a house and renovating it and then flipping it, real estate, to get your hands dirty. This way, a lot of people who have been in the stock market, a lot of generational wealth, a lot of families that have a lot of money have been in the stock market since the 80s, right? Since it began, and they just kept multiplying and multiplying and multiplying that money. And, now their families are set. So we want to get, a lot of Muslims, on board and involved. And alhamdulillah, it's definitely working because, we stress the halal way and we stress, our business model. And this is an option that's finally available. And you guys don't have to be scared about, interest or anything that's haram or against our religion. We have the experts on our end that will make sure that, we will never invest your money in anything that's deemed, haram. So thank you for attending. And if you ever want to email us, you can. That's our email right there, support@wahidinvest.com, and then our number if you ever want to chat with us. But yeah, if you guys do want to, join Wahid, I would first of all suggest just go to our website, check it out, feel it out for a little bit. And if you ever want to, join it, you can do it through the website or download our mobile app as well. So yeah, I don't know if we have time. I'm sure we have time for some questions. I guess we'll hear from Adnan on that.
Yeah, first off, Jazakallah to both of you for the very illuminating presentation. I have a couple of questions here that I can work through. So let me go ahead and begin. The first question we have is, what is the easiest way for a college student to begin investing?
Well, if you're 18 years old, you can start investing in the United States. So if you're 18 years old, you can start investing, and our app is great. It's $100 minimum. That's why we made it so low, right? So like students can at least afford to do it. If you think about it, you go out to dinner with your friends, your bill might cost you yourself like $40 or $100 on the whole weekend. We know a lot of people that will spend $100, just for a whole weekend, whereas you can put that $100 just once a month into an investment account and just let it grow over time. That way you're saving for your retirement, as well as things that you want to buy in the future, right? Like, you want to save up for a car, for a house. This is another way that you guys can do it. So as long as you're 18, you can invest.
I also think like the stock market is not like a get rich quick scheme. Like we should all take out the picture of like, oh, the Lamborghinis and the Ferraris and the watches, right? Like that, maybe once in a blue moon that may happen to somebody, but this is more so of a patient game, right? Like there's a quote that Warren Buffett says. He says the stock market is a place where it transfers money from the impatient to the patient, right? So I think the importance of long-term investing, like it takes away from the emotional aspect. It takes away from timing the market, where that could work in a negative way if you try to time the market. So I think slowly but surely, have your goals in mind, have with the mission of why you want to invest. Keep that in the back of your head, and inshallah, you'll get there. It just takes time and perseverance.
Thank you for that. The second question I have here is, can you withdraw your money at any time when investing, or are there certain restrictions?
Yeah. So with the individual investment account, you can deposit it and withdraw at any time as you wish. There's no lock-in period. There's no trading or commission fees. So it's very liquid. Some people even treat it as a savings account. They'll say, I don't like to have a savings account at the bank because it accrues interest. So their options are either opening up 2 checkings accounts or have one account that's a wahid account, and selecting more of a conservative risk profile where your money is invested into Islamic bonds that don't accrue interest, but they're more like conservative assets that give you maybe 2.5% yearly, but it's not as volatile as stocks, right? Like they stay pretty consistent and stagnant in a way. I don't want to use the word stagnant, but they stay pretty moderate and conservative, where they're not like swinging up and down like how stocks can do. So yeah, you can withdraw at any time. Yeah.
One other thing on the withdrawal too, if you have a retirement account, however, if you do withdraw early before retirement age, you want to make sure that that you'll be paying pretty heavy taxes on withdrawing early. The IRS and the U.S. government kind of made sure that they would tax you kind of heavily, just to make sure that you guys keep your money in there and keep it invested for retirement, right? But yeah, the good thing is you can literally withdraw your money at any time with us. We have a lot of people that have goals, or a lot of our clients want to save up for a car. And we see that, those are some of the calls that I love. Like, hey, I made this much money with Wahid. I'm ready to take some of it out and buy, a house, or put a down payment on a house. So it's really, really wonderful to see that the Muslim community is growing, and their money is growing alongside with them. And yeah, you can literally, have full control of your account with Wahid. And the good thing is too, if you don't know where to start with us too, we have a quiz that you have to go through in the beginning. It's not a hard quiz. It's not a SAT test or anything like that. It's about a series of 8 questions that kind of gauges what type of investor you are or how new you are to investing. And then at the end, it recommends a risk portfolio or risk type portfolio for you. We have 6 of them, from very aggressive all the way down to very conservative. Now, and the advisor is the platform itself, is the app itself, right? So if you ever want to, if you're ever in doubt of what to do, it will try to recommend a portfolio type for you. We see a lot of younger people kind of more on the aggressive side because they have a longer time frame, whereas a lot of older people, they might choose a more conservative side because they've saved up already, for retirement, and they don't want to really risk that much money, especially if they're going to retire in the next year or two. So there's a lot of flexibility and features.
Perfect. The next question I have is if you guys could talk about talk a little bit about how the financial landscape has changed in the past year, specifically with COVID and the rise of meme stocks, and how it may have or not have impacted investment?
Yeah,
Good question.
I think a lot has happened in the past year, I'd say, with investing, right? A cool statistic is that I just read the other day, from the bottom of the market in March 2020, when it sold off over 30%, till about Monday, 2 days ago, the S&P 500 is up 100%. So literally, if you put your money in, actually, I know the exact date, March 17th, 2020, if you invested that day till about Monday, 2 days ago, July 12th, you would have been up 100% in the market, right? And a lot of things have happened, right? Low interest rates, the 10-year bonds are soaring really high, right? So, and inflation's on the rise, right? Like, as we see, like, a lot of things have become more expensive, right? Used cars, food, gas, anything you can think of. But I think this shouldn't distract us of long-term goals. As you hear the Federal Reserve always saying that this is all transitory, it's not long-term, this is just temporary, we'll get over this hunch. So I think we shouldn't let these be distractions of our long-term goals. Like, we've had crashes in the past. 2008, we had the credit crisis in the early 2000s, we had the dot-com crash in the 2000s, we had the 1987 market crash. These will happen. This is part of the whole nature of it. But I just think long-term, we shouldn't allow this to affect us. Yes, some things, it can change policies and different things can go around it, but it's not like we can't work around it. It's just we have to find a new path forward. And I think if you have those long-term goals in mind, you will be untouchable in the end. What do you think, Kareem?
Yeah, I think so too. I mean, obviously, a lot of people nowadays there's a lot more investors, I would say. Right, a lot of people are starting to day trade, or they download Robinhood. They're starting to buy stocks. They're starting to see that there is value in investing, and those meme stocks. I would be careful with. This is not financial advice, obviously. You can do whatever you want, but they're kind of like penny stocks. You don't know what's going to go on with them. You don't know if the company is really stable. A lot of the meme stocks, if you look at the financial data on these companies, it's not that good, right? Maybe they don't have good enough revenue, or they're very low in sales, or they're heavily in debt. A lot of these meme stocks are popping off because of heavy short interest in them. So just be careful, when you're investing your money into individual stocks, because it's a lot more riskier. The landscape, it definitely has changed. I would say like 2 years ago, it was completely different than after COVID. But the good thing that COVID showed, especially our clients that stayed with us and didn't panic or freak out, it showed them that, okay, the market can come back and go higher, right? Depressions, there's corrections, there's volatility, there's recessions. They don't last forever, right? Recessions typically last, 12 to 18 months. And then after that, a new cycle begins, right? People think, oh, this is going to go on forever and the stock market is done. That's it. That's fear, and that's emotions that are taking control over you. As we stated before in our slide deck, don't let emotions, take over and get in your head, because we did have some clients that did leave the platform when COVID happened, and then they came back literally like 3 months later, and they were like, wow, we made a mistake. Like, look how much we could have made past that. So always look at news. Me and Zaki, we're always like looking at, CNBC, Bloomberg, Wall Street Journal, like what's going on in the economy. It's fun. I love looking at new companies that are IPOing, or new stocks, that are developing, and, how companies are growing. It's really, really interesting to see, okay, what's Apple going to do this year? Are they going to build a car? Oh, that looks, or what is Tesla going to do? Are they, flying to space or whatever, So it's really, really interesting to us to see how companies grow over time. Now, a lot of companies, they eventually get phased out of the stock market by either being bought by a bigger company, or they just, they don't make the cut anymore, and they're failing as a business, but you can always, stay tuned to what's going on in the stock market by going on a lot of financial news websites that are out there, and a lot of good books are out there too on investing and different methodologies and strategies.
I will say about the meme stocks though, the Reddit traders, right? Wall Street Bets, they actually saved AMC and GameStop from going out of business. Yeah. So actually, once upon a time, these are great companies like GameStop. Where else are you going to go and sell your video games at, right? Or your system? Yeah, you may not get the best deal on them. We know that, but like that's the spot like where you'd go and get the new Call of Duty when it comes out, or like the new video game. So they actually did save these companies, but they're not long-term portfolio companies. Like they may have saved them, but they're not something I don't think is going to be good for long-term.
Yeah, I would also say like it also shows you the power of the people, right? With meme stocks, these people who are investing in these stocks to push the price up, they're going against the big boys, right? Hedge funds, these big investment companies, and back in the day, to get into the stock market, like I'm talking about back in the day, you would have to have like a minimum of $1 million or $10 million. It was for a small few. Nowadays, you have robo advisors like Robinhood and Wahed Invest that's giving the power to the people to be able to jump into the stock market. It's not just for the high net worth families or people, and this way you're allowed to grow your money on your own instead of at a minimum investment too.
Yeah. Thank you for that thorough response. Once again, Jazakallah, thank you so much, Kareem and Zaki, for joining us. That concludes our Q&A session. And just a reminder, Insha'Allah, definitely follow Wahed Investments. They're on Instagram, Facebook, social media. You can contact them at the number or the email that is currently on screen. Insha'Allah, this entire lecture workshop has been recorded, so it will be on our YouTube channel where you can access it at any time. And we, as MSA National, also have some very cool events planned for the upcoming year. Our annual conference is coming up soon. We have a career development series that is bringing on some really cool people, and Inshallah, you can join it on Clubhouse, and it will be streamed on different social media. We also have a data research project that we are excited to be coming out with, Inshallah. So definitely stay tuned, both with Wahed Investments on social media and MSA National as well. And once again, Zaki, Kareem, thank you so much for joining us. It was a pleasure having you.
Thank you so much, Adnan. We appreciate it.
It was our pleasure. Thank you again.
All right. Assalamu alaikum.